Welcome back, everyone. We do hope that you are enjoying the content of the OSL Digital Asset Capital Introduction Conference so far. We're really delighted to be able to introduce Tim McCourt from the CME for our Fireside Chat with Adam Crawford from OSL, who runs prime trading at OSL. Again, just a reminder, if you have questions, please use the tab on the right-hand side to post them there, and we'll do our best to get them in front of Tim. Adam, Tim, over to you guys. Thank you.
Great, thank you very much, Matt, and once again, thank you, Tim, for joining us this morning, to talk about derivatives. So my first question is, perhaps you can tell me a little bit about the CME's crypto journey and what products you started out with and how you evolved to being where you are today.
Yeah, thanks, Adam, and thanks for having me, and congratulations on another great conference, enjoyable. What's been interesting is CME Group has been involved in cryptocurrency since back in 2016 when we first introduced the Bitcoin reference rate, or the BRR, with our partners' crypto facilities, now known as CF benchmarks. And what's interesting is a lot of our motivation and blueprint for success in bringing products to market with respect to cryptocurrencies really comes to listening to customer feedback and trying to help the marketplace address clear, palpable, articulated problems and demands, whether they're risk management, access, and just trading needs around cryptocurrency. And that's what really started this back in 2016. The feedback was that the marketplace and our clients wanted a transparent, once-a-day reference rate value. What is the US dollar value of Bitcoin in a given market in time? Thinking back to 2016, the price discovery process was very disparate across all the various spot exchanges. So that was kind of the first step, was that trust and transparency, because that is what CME does. We're a nearly 180-year-old institution. We started off as a butter and eggs exchange back then, and now have had a long storied history of innovation. And cryptocurrencies is kind of the latest chapter in that, but along the whole way is a centrally cleared marketplace, a regulated US futures exchange. These are things that the market came to us at a very interesting time, saying we wanted that trusted, transparent price discovery process to happen on a reference rate. And then about a year later, in December of 2017, we introduced Bitcoin futures, and then Ether futures, Bitcoin options, and most recently micro Bitcoin just back in May at CME. So it's really just been, again, listening to customers and helping to address those clearly articulated risk management needs, and about accessing the cryptocurrency market with financially settled US dollar-based derivatives and futures contracts has really been something that we've worked with the marketplace. It's been a great few years, but I would say that's really the main thread, is just listening to customers and working with them to give them what they need to manage their risk and to access this market.
Yeah, and for the BRR, what criteria did you consider when considering what price fees to use and what exchanges?
Yeah, it's a great question. So there's a publicly available inclusion criteria, which also then serves as the exclusion criteria. Whereas if you run afoul, you'll be removed from the Bitcoin reference rate. I would also point out is the Bitcoin reference rate and the Ether US dollar reference rate that was launched in 2018 are regulated benchmarks. They're regulated under EU BMR. So they are regulated cryptocurrency benchmarks, the first of its kind. And the criteria and the robustness really was around that. It was not only about designing a reference rate that is resistant to manipulation, but also making sure that it represents a large swath of that Bitcoin or Ether US dollar fiat spot transaction. So the 5 constituent exchanges we work with at present in the reference rate are Bitstamp, Itbit, Coinbase, Gemini, and Kraken. And for Bitcoin, that represents upwards of 60 to 70% of the Bitcoin US dollar fiat market per 24 hours. And then the Ether is similar, but it's about 50 to 60%, I believe, for Ether. So it's a really short list of those spot exchanges and venues that are being actively traded on, amalgamating those into the reference rate and making sure they have the right KYC, the AML. They have to have information sharing agreements with CMEs such that we could still continue to surveil our market as it relates to the futures market and what activity might be happening at constituent exchanges, since it's the underlying. So it's a really robust mechanism and the infrastructure around these two or series of benchmarks with CF benchmarks and CME reference rates is really, I think, what has made the future also such a successful product is that foundational element of regulated benchmark and robust underlying reference rate has served for the US dollar settlement of the futures.
Gotcha. And you mentioned Bitcoin. Can you tell us a little bit about your decision to introduce that?
Yeah, micro Bitcoin has certainly been a resounding success. We launched it back on May 3rd. Over 2 million contracts have already traded since its launch. And similar to some of our other products, like our micro E-mini contracts, that we launched back in May of 2019, it's really about listening to customers. They wanted a more precise, smaller size contract to manage their risk. And when we look at Bitcoin, when we first introduced the BTC, the original 5X contract in December of 2017, Bitcoin was, 8,000 or 9,000, went up to 20,000, came back down. Now with Bitcoin, kind of touching the 50, 60,000 handle that we saw earlier, back when we were introducing the contract, it's a very large futures contract. We're talking between $250,000 to $300,000. So we introduced the micro at 1/10 of one Bitcoin, which is 1/50th the size of its older sibling BTC contract. So micro Bitcoin, the MBT contract, really appeals to not only the active individual traders, the sophisticated individual traders that might be trading the other micros at CME, but also even the institutional contracts. The institutional accounts, the institutional traders are also trading the micro contract because, when we look at and we listen to some of the other panels, we're talking about structured products or the advent of ETFs or asset management. You can now also more finely match up dollar inflows using the micro because now you don't have to wait for a $300,000 kind of roundup of order worth 5 Bitcoin. You can now kind of allocate and equitize, for lack of a better word, to use the equity index parlance for asset managers at 1/10 of Bitcoin increment. So immensely useful for all traders across all segments in the marketplace.
Yeah, because I was quite curious because back in the equity space, contract size is more or less self-regulated. If Apple, the share price goes up too much, they do a share split, right? So you end up with, roughly equivalent contract size. Whereas, to your point, a BTC can suddenly turn from a $50,000 contract into a $300,000 contract.
That's right. And it's the same thing we saw with the micro equity contracts at CME on the NASDAQ, Dow, Russell, and S&P is just by more of a passive event of price appreciation of the index or the underlying asset, the contract is growing. And with Bitcoin and equities and the indices, there's not necessarily any type of governor on the upward price movement. So over time, if that gets too large, you have to right size it so people can precisely manage their risk or access the market in a more approachable size contracts and investment slices.
Yeah. Now, you've recently introduced a BTIC. So would you like to tell us a little bit about that?
Absolutely. So basis trade at index close, or BTIC it's known, is an order mechanism that we use at the exchange where market participants can trade the basis between the futures and the underlying spot market. It works really well when there's an underlying index because you can now just trade the differential between that once-a-day fixing rate on the BRR or the Ether US dollar reference rate and the CME futures. So what's interesting, I think, particularly around BTIC on cryptocurrency, is it's certainly going to be a useful tool for institutional clients like asset managers, ETF providers, and we're thinking about, we just launched BTIC on crypto back on September 27th, and that will help with some of that thing we're talking about of managing that money and those inflows to the once-a-day Bitcoin reference rate or the Ether US dollar reference rate. It gives you all the benefits of a futures contract, but since you're trading the basis or the differential, you really get that official reference rate price, but in the preferred holding of a futures contract with all the benefits, capital efficiencies, it being centrally cleared, it being a regulated contract. So I think that will really be a catalyst for more structured product development, different types of OTC trading that we see in some of the more established or traditional asset classes where BTIC exists. And I also think separately, what I think is unique or could be unique about it, I'm excited to watch as it grows from here, is there's so much trading and interest that goes on around the basis itself between the reference rate or crypto spot and the futures. And I think you're also going to have an additional personality of market personas or market segments in this type of contract who are actively trading the basis throughout the day and not just using it for kind of that more structured product or that once a day fixing or conversions, which will be great because you actually need multiple different types of customers in that product to really get the liquidity going early on. And we're excited. We had a few trades in the contract already. And for me, just personally, being at the CME for 8.5 years and also running equity, to try and kind of combine now some of the innovative products my team has brought to market, BTIC from equity on top of the innovative crypto contracts that we have, it's really exciting to see us deploying more traditional order mechanisms, something is new and exciting to the market still is cryptocurrency.
And you chose 4 p.m. London time. Is that just because it's a traditional 24-hour FX fixing, or?
Well, that's a good question. We all know underlying crypto never closes, so it trades 24/7. But when we were first designing the reference rate, we also have real-time index versions of the BRR and Ether US dollar reference rate that tick every second, 24/7. But the once-a-day reference rate is we picked the 4 p.m. London time because the reference rate is calculated by taking those Bitcoin or Ether dollar fiat transactions over a 1 hour window. It takes that 1 hour window and actually divides it into 12 equally weighted 5-minute windows and takes the average median, the weighted median price of the transactions and then straight line averages them. 3 to 4 p.m. London time, when we first were looking at it, 2015, 2016, was the hour that had the most Bitcoin US dollar spot trading occur, and that largely still holds true. It's still the most volume-driven hour in the 24-hour cycle. And I think why that is because really, when you think about it, I think it's a really nice window of overlap where you're going to have the Asia markets, the European markets, and the US markets all still kind of overlapping and participating at that same time before kind of people call it a night in Asia. And what's interesting is I think also that global mindset we deployed in designing the reference rate and designing the contracts at CME has really paid off with respect to the volume growth we've seen, the open interest growth we've seen, and the global participation in Bitcoin. About 45 to 50% of the volume comes from outside the US, both in terms of country of origin as well as trading hours. About 50% of the volume happening before the US traditional markets open at 9:30 Eastern. So I think being mindful of product design and referencing how this ecosystem could have developed, it certainly developed in a lot of ways we expected. And it was just important for us to have that global perspective, in terms of picking the right hour per day. And I think we've seen really strong adoption because of that feature as well.
And so you're talking about open interest. I mean, who's trading your products? I mean, is it we seeing a lot of institutional adoption? Is it retail trading storming in to trade the minis, or?
Yeah, it's a great question. So we're doing about 10,000 contracts a day in BTC, the original 5X, and about 20,000 contracts a day in the micro. And we actually just here in September, I think, did about a little over 6,000 contracts a day in the Ether contract, which is a 50x multiplier for Ether. And that volume and that participation really is balanced across all the segments. We have CTAs there, we have asset managers, we have institutional, we have proprietary trading firms, we have hedge funds, and then we have more crypto native funds offerings, crypto trading shops, as well as active individual traders from the retail segment. So it's really balanced. Where even now, you've seen the headlines out there. Even some of the banks are now getting more involved, not only for the facilitation of their clients, but also doing OTC transactions and using futures to hedge those transactions. So you really are seeing that ecosystem coalesce around the listed regulated futures contracts at CME. That's great to see. So I think it's that really balanced participation across all segments. And we've been really pleased with it. Where we've had in the Bitcoin contract, we've had about 9,000 accounts trade the product since launch, and OI continues to grow with peaking over 100 large traders in the Bitcoin contract a few months back, and even in the micro contract, we're around 80 large traders, which are those firms that hold, or if those firms or individual that hold at least 25 contracts or more of each of the futures. So these are pretty sizable positions for institutions as well as individuals. And it's really been great to see trading volume grow, open interest grow, just a nice distribution across the globe, all great things for futures contracts.
That's cool. And, as the space becomes more regulated, how do you think that's going to affect product innovation and particularly the products you're going to provide?
Yeah, that's a great question. So I think, for us, we always view regulation as a feature and not a bug. We think one of the things that has really led to our success is being that, that credible regulated institution, almost 2 centuries worth of history as operating as an exchange. We just recently, celebrated over 100 years of offering essentially clear products through the CME clearinghouse. So a long tradition and a highly, heavily regulated infrastructure in the US. But I think that gives people confidence and comfort in trading the futures product. And now what we're seeing is using the futures product then to underlie other products in the market. We have the mutual funds that have recently come online. I think everyone's kind of waiting the next few weeks to see what we do with what happens on the ETFs. I'm hopeful that comes to light. We're highly supportive of the ETF effort where it'd be symbiotic to the ecosystem, and it would really help everything grow in terms of the risk transfer, liquidity formation, and price, the price discovery process. But I think, for us, we still are, operating CFTC regulated contracts on Bitcoin and Ether. We do need a little bit more clarity if we were to look into other tokens and things of that nature. Bitcoin and Ether still, from our perspective, are the ones that have the most clarity that we can, with respect to derivatives, where they said, Bitcoin and Ether are commodities. Some of the other tokens, despite their volumes and their importance in the ecosystem and the underlying spot markets, we still don't have that regulatory clarity. So we will always need that first. Is it going to be a commodity-based future? Is it going to be a securities futures product? We need that clarity before we can bring a contract to market as a regulated exchange in the US.
Gotcha. And what do you think? We're talking about ETFs. What do you think is the next innovation in the crypto space, and and how is CME going to be involved in that?
That's a good question. I think certainly I would like to see the ETFs. So I think we're all waiting with bated breath in the next few weeks. But I think we look beyond that. I really think it's, if you look into the volatility space, I think you're going to see more volatility products, especially with, we have Bitcoin options at CME. We're seeing more growth within some of the regulated option offering. You see some things happening on the index front with respect to volatility. So I think as you look at some of the asset managers and bank clients coming online with the product that we were talking about a few minutes ago, Adam, is that you're going to see, I think, more structured products. And I think you're going to see more volatility structured products. I think you're going to kind of see the ecosystem really grow in kind of concentric circles. So I think I'm curious, and I think it will be on the volatility front. I think we're going to see some nice structured products that off the back of using CME futures as the underlines, as well as overlaying or embedding some optionality that we saw this develop in the equity ecosystem over the last few decades. So I largely think this will look much more like the equity ecosystem growth when you think about futures, options, ETFs, underlying spot and cash and OTC markets. I think we're going to see that type as the next frontier of innovation, as more traditional financial firms figure out how to use something like a regulated future at CME to drive that engine they're so familiar with in other asset classes like equities.
So it's possible to replicate variants with strips of options. Do you feel that might be coming?
Yeah, maybe, hard to say, but I will say, anyone out there who thinks it's useful, let us know. Like I was saying at the top of our conversation, we're always listening to clients and looking for them for the ideas, because, sometimes they're a much better source of what we should be focusing on than what myself and my team can come up without their input. But yeah, I think variance, volatility, structured products, I think that kind of now second to third generation or second or third order effect of the ecosystem, I think we'll start to see things like that. And super excited to work with our customers to bring these type of products that are based on our futures to the marketplace.
What kind of time frame? Because we're talking about the foundations and then building on top of that. How what kind of time frame do you think that will happen over?
It's tough to say or forecast the time. I think if my crystal ball worked better, I'd probably be in a different profession. So hard to say, but I do say just anecdotally based on our customer conversation, and I'm not sure, I think you guys are probably seeing and having similar conversations, the cadence of the conversations is certainly increasing. I think more people are looking at it. I think a lot of folks and institutions have gotten over their initial reservations about moving into crypto, and it's certainly something, this is a story that's not going away. It's only getting bigger. It's only attracting more traditional players into this space, more individuals professionals, institutionals, clients. So I think, the cadence is increasing, but I think with the regulatory framework, at least from a U.S. perspective, that is still something that needs to be worked out. So there are kind of external factors besides just the wanting of the innovation that may also dictate the timetable. But I think from our perspective, we're certainly seeing the cadence increase, and I'm looking forward to see what our clients also bring to the market.
Gotcha. Right, Tim. Well, apparently we're out of time. So thank you very much for your great insights. We're all very excited to see what happens in the institutional space as the derivatives offering fleshes out. And I believe we'll be back in 5 minutes for today's third panel. So thank you very much for your time again, Tim. It's been great.
Adam, thank you so much for having me.
Very much appreciate it.